Now, Brent crude futures surged above $76 a barrel to a three-year high earlier today as traders brace for the possible re-imposition of U.S. restrictions on Iran. Jubril Kareem, an oil and gas analyst at Ecobank, joins me now for an outlook on oil prices to discuss some of the breaking stories in Nigeria's oil and gas sector. Well, thank you so much for joining us on the show, Jubril.
Thank you for having me.
Now, Jubril, with fears that Venezuela's economic crisis might deepen, we're seeing oil prices hit over $70 a barrel today. Do you see that hitting, say, $80 in a few months coming?
I think it's a possibility, okay. And even we could hit $80 much more closer than a few months. Because if you look at where we are now, we're at $76, which is a three-year high, and the expectation had that by May 12, the U.S. will most likely, at least to a very high degree of certainty, pull out of the Iran nuclear deal that removes sanction from Iran. Reintroduction of sanction, and estimate from different sources have said that by the end of 2018, that is likely to take out about 500,000 barrels of Iran crude from the market. Yeah. It's a very significant. It has a very significant impact on the supply side. And if you look at what is happening, coupled with what is happening in Venezuela as well as OPEC continued crude oil cuts, it means the supply side will be significantly depressed towards the end of the year. And our expectation is that, given that we expect higher crude oil price volatility, even by the time trading starts next week, following the May 12 decision, we might actually see a surge that take crude oil price closer to $80.
The analysts actually believe, the price we're seeing right now is just more of like investors already, pricing in what might happen in the next 5 days. But then, Trump being who he is, what if he decides to delay, of course, the announcement of whatever decision he's going to take, or if he decides to actually just leave the agreement as it is? Do you still see oil prices climbing up, or do you see actually Venezuela's economic crisis impacting here, or do you actually foresee a slump?
Well, actually, the way we see it is that we think the upside potential, should the U.S. pull out of the deal, is there, but is actually much more moderate, because a lot of hedge funds have been taking a bet on that for a very long time now, and we've seen the rally since the U.S. started opening its rhetoric in terms of threatening to remove the sanction. We've seen the rally over the period. So we think, yes, there will be a rally when the announcement is made. We might see crude oil move closer to $80, but it will not be the magnitude that a lot of analysts are anticipating. But on the contrary, should the U.S. remain in the deal, that's where we see the major risk to crude oil price. Okay. We think the retraction will actually be very, very much more significant than the upside should the U.S. remain in the deal, because a lot of
so if the U.S. remains, what's happening in Venezuela will have little or no impact on prices?
It will continue to have impact in terms of supply in the market. But as we have seen, the decline in terms of production from Venezuela has been a gradual process. It's not what we see if the sanctions are reintroduced, where we will see 500,000 in a matter of months taken out of the market. So yes, the Venezuela effect will continue to happen. We continue to taper crude oil price, but in terms of volatility and huge movement in crude oil price, we think the decision by the U.S. government is what will dictate that in the short term.
Now, of course, if the sanctions take place, of course, on Iran at the moment, let's talk a bit about how you think supply is going to play out. Of course, there are cuts that have actually been imposed to begin with. Do you see OPEC actually lifting that to begin with? Venezuela already has its problems to start with.
Okay, so what we need to see is that Saudi Arabia, the major player in terms of the OPEC cut, is they think that crude oil price should be much trading somewhere close to about $80 per barrel. Okay. Iran actually believe in wants a lower price. So if Iran is taken out of the market and crude oil price rally, is when we see crude oil price above the $80 mark that we begin to see some form of concern, being raised by the OPEC members or others. But in terms of supply and production, I think even towards the end of the year, yes, Iran supply might be out of the market up to 500,000 barrels, but increased production from shale producers in the U.S. who have actually been ranking up exploration activities and production and development projects in the past few months will actually increase supply significantly, because what we've seen in terms of rig count in the U.S. is that we've seen them increase from for a one-year high of from 600 to about 800, and this shows that development activities, appraisal, drilling, and all are actually on the increase. And we're estimating that from the period where we've been seeing that increase to the period that we expect that to start impacting production, we're thinking of we're seeing it at more of third quarter and fourth quarter of the year, which will actually align with the period that we'll see most of Iran crude will actually be taken off the market as well.
Let's take a look at the implication now, even beyond the impact on supply and prices. If the U.S. is likely to take in that decision, I mean, the U.S. has said it's the worst agreement ever. Iran, on the other hand, has said the U.S. will regret it if it goes ahead to take that decision. Political risks, basically, in this area, especially, of course, for oil investors who are looking within that space. What are your fears?
Well, in terms of the political risks that come with it, is that we should realize that for a very long time, for the period of 2006, the U.S. started imposing sanctions on Iran down to 2016, there were significant decline in terms of investment in crude production in Iran. Most of the investment that were coming from Southeast Asia. Most of the European producers totally ignored that region. So this is what we see that will reoccur again. And in terms of the U.S. position, it then brings another situation again as to the credibility of successive U.S. governments as well, because this was a deal that was spearheaded by a former U.S. president and was agreed to by a former U.S. president. And we now have a similar deal that is a similar situation with North Korea as well. So it then becomes a situation of if the U.S. can pull out of a deal that a former president agreed to, with North Korea actually be interested.
So clearly, this is not even a problem that's actually just peculiar to Nigeria alone. When we have a new administration come into power, policies change, agreements that have been signed with previous administrations also change as well, which actually raises the question on the true intention, behind Trump's decision to want to reverse the agreement earlier on. You just mentioned, of course, that if this goes through, we're actually likely going to see, of course, more production of shale oil flood the markets to begin with. And I'm asking myself, could that be a reason behind, or is the agreement that bad? I mean, that's how, President Trump actually did describe it.
Well, it depends on who you're asking. If you're asking people that negotiated the deal and that agreed to the deal, both on the Iran side and on the European side, they will say that this is the best deal that could be achieved given the condition at the time.
That's the deal with Iran?
Yes, but if you're asking those who were not part of the deal, which is majority of those who are opposing the deal right now, that is the conservative government currently in place in the United States, of course they will have that to say, because they were not at the negotiation table. They didn't know how difficult it was to agree to what it is. So it's quite easier to actually, from outside, criticize what it is.
Interesting. Well, thank you so much for your contribution, Jubril Kareem there, an oil and gas analyst at Ecobank.